For our last panel of the day, the hot topic is corporate investment in innovation. Corporate VCs have invested $28.4 billion last year in startups across the world, according to CB Insights. In MENA, corporate investment has been gaining traction over the last 4 years, with more than a dozen companies investing strategically in new ventures. This panel will shed light on the corporate investment space, the objectives, varying models, lessons learned, and how all of this drives business growth. To moderate this panel, please welcome on stage Mr. Paul Morris, Director of Corporate Venture Capital, UKTI.
Could I have the rest of the panel members on stage, please? Good afternoon and welcome to the last session of the day. I was honored to be asked to chair this panel, and then I looked at the agenda and I saw it was actually the last thing of the day, and I began to wonder, was that a good idea? And then I heard during the day that we have a conference, indeed a city full of smart and happy people, and we also heard from Omar this morning that these are people that are serious about their work, so I needn't have worried, and it's great to see so many people still here. This panel is going to provide some insights into the dynamic and exciting and occasionally mysterious world of corporate venturing and corporate venture capital. And just to give you a couple of numbers, corporates now, corporate venture capital units now number around 1,500 globally. And that number has doubled in the last 5 years. So an indication of how dynamic and growing this sector is. As you heard a minute ago, corporates have invested in deals that collectively raised nearly $30 billion last year. And in 20% of all VC deals, there is at least one corporate involved. So it's an exciting area. And I think for you, the startups here, the interesting thing about corporate VC is, a VC fund may invest or they may not. The interesting thing about a corporate is that they may invest, but also the corporate VC unit is a great conduit into the broader organization. So the opportunity for strategic collaborations is there, and you can make those connections through the corporate VC. So I'm going to allow the panel to introduce themselves. Just from my side, I spent most of my career with Dow Chemical, a large US corporation. And back in 1995, I set up Dow's corporate VC in Europe and ran that for about 15 years. So I've been in corporate VC for quite a while. I feel passionately about it. I do some independent work now, all related to corporate VC, advising the UK government on the one hand, but also working in Lebanon with the UK Lebanon Tech Hub. And again, that initiative, the Circular 331, which Omar referred to earlier today, has kick-started the VC industry in Lebanon. So I'm going to ask the panel to introduce themselves. Lana.
Thanks, Paul. So hi, everyone. My name is Lana Ghanem. I'm currently the managing director of Hikma Ventures. I was born and raised in Jordan. I did my undergrad in Canada in finance and marketing. And then I worked for 3 years in London in investment banking. And then I did my MBA in the US for 2 years. And in 2012, I joined Hikma Pharmaceuticals in my capacity as assistant to the CEO. And I've been working on various strategic projects ever since. And currently, I'm leading the venture capital fund.
Samar.
Thanks. Hi, everyone. My name is Samar Shakir. I'm VP CE Ventures, corporate based out of Sharjah. My background is fairly startup-oriented or entrepreneurial. I started my first business when I was still in college in Montreal, Canada. And as of most recently, just before Crescent, I was running Groupon operations for the UAE. CE Ventures is a small business unit that's part of the Crescent Group, which is originally in oil and gas as a core business. We also have holdings in ports operators, in EPC construction, in healthcare, aviation. So mostly heavy industry and infrastructure type businesses. And CE Ventures was conceived about 2 years ago as a vehicle through which to conceive, develop, and build new sustainable businesses to diversify the group's portfolio. We are mandated with building businesses that are socially sustainable, financially sustainable, and of course environmentally sustainable. We're supposed to make money while being good to the world. That's what we do.
Aaron.
Hi, everyone. My name's Aaron. I'm a partner at Nest. At Nest, we've been investing in companies and startups for the last 6 years. We invested in companies all across the world, in the US, Europe, and in Asia. We also run Nest Innovation, which is a platform we work together with very large corporate partners on. Some of our partners include Nissan, AIA, DBS Bank, OCBC Bank, as well as Barclays. And we work together with these very large corporates to bring them closer to startups, whether that's to find licensable technologies, or even just to understand them a little bit better, or even to go more in depth and look at an investment opportunity. Nest Innovation is the platform we've built to do that. And the driving force behind why we've done that is really because after investing in startups for 6 years, many of our companies have come to us and said, you know, your capital is well and good, but what we really need is market access, brand legitimacy, and more opportunities for partnerships. Give us an opportunity to grow, don't just give us capital. And I think, you know, corporates have a very large part to play within that. So very glad to be here today and to explore that further.
Okay, my name is Gary Stewart, originally from the United States. So I grew up in New York, went to Yale College, Yale Law School, so I thought I was going to be a lawyer. But then after about 5 years of realizing how boring law was, I eventually created my own startup in Barcelona. We raised about 3 million euros, I guess, in financing. I did that for about 5 years. Earlier this year, we sold a company to an Australian competitor, so that was okay, it turned out well. In addition, after about 5 years of running the company, I decided that I wanted to do something else. I still stayed on the board and as a shareholder, but I went to teach at a business school in Madrid. And then when I was there, Telefonica came to me and said, listen, we see what you're doing in the startup world. We would love for you to work with us and help us launch this accelerator called Wayra, and Spain would be the pilot. Telefonica, for those of you that don't know, is a company that does about 55 billion euros a year in revenue, has about 315 million customers around the world. It's pretty big in Latin America and in Europe. In Europe, you know it better as the O2 brand. But Telefonica had a problem, which was that all of a sudden you had companies like Skype or WhatsApp that kind of disintermediated entire lines of business. So Telefonica said, well, instead of trying to work against startups, let's work with them. And so we launched Wayra Academies in 12 countries around the world. So we have 14 physical spaces. We actually invest in the startups, and now we have a portfolio of about 650 companies. Telefonica's committed about 365 million euros to open initiatives. What do you call it? And I think, yeah, that's pretty much it. So the idea is that now we're doing everything. Wayra was kind of the first brand that we did, which is the accelerator brand, but now we're doing something called Telefonica Open Future, which also includes the venture capital arm, co-working spaces, and also mergers and acquisitions.
Thanks, Gary. You certainly couldn't accuse the panel of lacking diversity there. We've got 2 accelerators, but with very different approaches. One internally driven corporate venturing group and one more traditional corporate VC group. So thank you for the introductions. I think that gave us a great insight into the organizations that the 4 panelists are running, but didn't really tell us that much about the individuals. So given that it's late in the day, we could maybe just take half a minute to have a couple more insights. So I'm going to ask each one of the panelists 2 questions, but they can only use 2 words to answer. And the questions are, to give you an insight into the individuals, where did you last go on holiday? And what do you enjoy outside of work? And I'm prepared to start. So France and rugby. Where did you last go on holiday? And what do you enjoy outside of work?
Okay, so it's Italy, and honestly, Paul, I'm not the most articulate person, but the thing that I enjoy the most outside of work is playing with my nieces and nephews.
That's a lot more than 2 words. South Africa, snowboarding.
Aaron?
Zimbabwe and going undercover in informal transport systems in Africa.
We'll talk about that later.
So India and tennis.
Thanks. So, back to the business. Lana, Hikma Ventures was set up just in the last year. What was the main reason? Why did you guys set this up? And how do you go about choosing the companies that you may want to invest in?
So I'm not sure how familiar the audience is with Hikma Pharmaceuticals, but Hikma is basically a global pharmaceutical manufacturer. We sell our products in more than 50 countries worldwide, and we basically have manufacturing facilities spanning 3 regions. And very recently, as a global pharma company, we believe that investing in digital health is becoming more of a necessity than a nice to have. It's a way for us to differentiate ourselves as a global player. It's a way for us to be at the forefront of emerging technologies in the space and in the area, in the pharmaceutical industry. And as you mentioned, Paul, in August 2015, we decided to establish Hikma Ventures, mainly as an instrument for strategic growth, to broaden Hikma's offerings, and to tap into opportunities in the digital health space. So Hikma is currently the largest regional player in the Middle East and North Africa. It's the 6th largest generic player in the US. We have more than 9,000 employees worldwide. And we're looking to invest in companies whereby we can, or startups whereby we can expedite their growth. So, we're looking to be the pioneers in bringing in emerging technologies, in the West to, our part of the world, and to taking, technologies and companies that are in this part of the world globally. And, we have the in-house expertise to do that. And to your question with regards to evaluating opportunities, I guess, Paul, the advantage of being the VC arm of a corporate is the fact that you have a whole engine behind you. You have all the in-house resources, be it, the BD team, the R&D team, the, IP team, to help you evaluate and validate the services and products. So it's, in terms of due diligence, this is the way we go about it. We take advantage of our internal resources.
That's great, Lana. You guys, I think, are really on the right track there. And of the many corporates that have set up in the last 5 years that I referred to at the start, of course, you guys are one of them. Thank you. Sama, Crescent Enterprises is a big organization. And you've got a very challenging task in sort of diving into there and looking at where can you drive innovation, where can you either spin things out or help form new ventures. How do you go about, in a big organization like that, choosing where to put your effort and resources? And how do you staff those things?
So one of the main reasons why CE Ventures was created is specifically to tackle that challenge. So typically in such a large organization, it's very difficult to have an idea and then turn that idea and go through that gestation period, which can be up to 2-3 years, and turn it into an operating business, while those same resources could be utilized to run your multi-billion-dollar assets. So that's exactly why we were created as almost a standalone or a separate entity, or a protected entity that can go about conceiving, developing, and taking the time to create these new businesses. Now, what areas do we tackle? It's left completely open, so we have a blank sheet to work from. Like I said, we only have one single criteria, which is a business with a purpose or sustainability. The ideas are conceived internally by us as a team, by different members of the Crescent team, and we are left alone to do the research and to do the studies and to develop the business plans and to try to build these businesses almost separate from the typical day-to-day resources or typical day-to-day processes that the rest of the company has to follow. And this is done specifically to tackle that challenge of being in such a large organization. So we're really not, we're part of a large organization, but we're a very, very small, nimble organization as CE Ventures.
And in terms of staffing?
That is my biggest challenge. So we're trying to do things the other way around. We start the business, we conceive the idea, we develop it, we incubate it, we start the business, and then we go out looking for an entrepreneur that'll be willing to come in and run it as his own. Of course, the skill set required at that stage is very, very different from your typical corporate exec. We're looking for people who have the skill set and the knowledge and the industry know-how, while at the same time having the entrepreneurial mindset that will allow them to deal with the challenging environment of a startup. You have to be able to multitask. You have to have multiple hats on at various times of the day, while at the same time you need to be able to build a proper organization that is built for the long term, understanding what a large corporate requires in the future, while at the same time doing it from the ground up. So yeah, it is very challenging, but we're lucky enough to find people who fit that role.
Great. I see the scale of the challenge. It's complex, but you guys seem to be making great progress. Aaron, I know you had some challenges getting here today with flights and that, but I've got some good news for you. I've got a great startup in Africa. I really want to come and join your accelerator program. I've heard great things about it. What do I need to say or do to give myself the best possible chance of being accepted into your program?
Sure. Well, first of all, it's you, Paul, so obviously you're in. But
That's my friend, actually.
No, but I do think what we look for very much is the startup telling us a story around why we are a strategic fit for them. Whether that's leveraging our networks across the world. We have on-the-ground presences in Bangkok, Hong Kong, Manila, Indonesia, Paris, London, New York. If you can speak towards how we can help you access those markets and why you need us, that's a great place to start. We specifically look at B2B and B2B2C businesses significantly more than B2C businesses. So if you're already in that category, also fantastic. We have especially strong strategic partnerships in the health tech, fintech, as well as the IoT space, again, via our partners like Nissan and AIA Insurance. And so if you're able to speak towards how you can use them as well to further gain market access, that's sort of where I would start. I mean, for us, obviously, the usual things around traction and team first are very, very important. But I think the unique part of what we look for is our ability to help accelerate you in a way that no one else can. It's less a story of whether you're a good fit for us, but whether we're a good fit for you as well. So,
well, from all I've heard, I think you'll be a great fit for me, but we'll come back to that in the next question, I think. Gary, Wayra, has a very strong corporate backer in Telefonica. Tell us a little bit about how that relationship works and to what extent you operate as an independent accelerator, or to what extent is the parent, Telefonica, involved in the organization and decision making?
So, I mean, I think that Wayra is 100% owned by Telefonica. I'm a Telefonica employee. I wasn't at the beginning, but now I am. And the founder of Wayra is now the CEO of Telefonica's global operations. So, I mean, you have the number one guy basically being the person who founded Wayra and still viewing it as something that he's really, really passionate about. If you look at his Twitter feed, for example, you'll see that he says, CEO of Telefonica, founder of Wayra. In terms of how we operate, though, they kind of, from the very, very beginning, because it was actually Jose Maria that kind of had to give the final sign-off when I joined the company. And when he came, he said, since I didn't come from Telefonica, I was more from an entrepreneurial background, he's like, Gary, we need your help. Help guide us. So, I mean, there was, from the very beginning, a kind of humility in Telefonica's point, which was that they didn't know anything about this entrepreneurship space, and that's specifically why they went outside of the company to try and find people to help them to build it. And I think that that's kind of the way we continue to this day. That being said, obviously, Telefonica isn't doing this for PR purposes. The whole point really is about building or bringing the innovation back into the company. So the way they kind of maintain some sort of oversight of us is they give us a budget, and then I can pretty much kind of do what I need to do in a country. But at the same time, we have two main KPIs. The first would be how much outside or third-party funding are the startups raising? So are we operating as well as a traditional accelerator? And in that sense, in London, we've benchmarked ourselves against kind of Seedcamp and Techstars, and we're on par. Our startups have raised about $71 million over the last couple of years, so I think they're doing pretty well. And then the second criterion where we can really distinguish ourselves is, can we actually get the innovation back into the company in a concrete way in the form of trials or contracts between Telefonica and the startups. And so over the last couple of years, we've done about 64 pilots and trials only in the UK, and there have been about $6 million worth of contracts between Telefonica and the startups. And they're constantly asking us to kind of push that more and more. In fact, we have on our team in the UK 2 people who are fully dedicated only to navigating that relationship between Telefonica and the startups, because a lot of times neither side understands each other that well. They speak like almost 2 different languages. So it's about helping them to kind of speak a common language and find common purpose.
Thanks, Gary. I mean, not only is it a great accelerator with a very strong reputation, it also sounds like a great place to be in terms of career progression. So,
let's hope.
Very, very interesting. Just come back to Lana. You talked about, you're still in the early stages of your corporate VC unit, but you have larger global ambitions. How do you go about, deal flow and finding deals? And in terms of investments, in terms of syndicating investments or working with investment partners, how might that work?
Thanks for this question, Paul. So ever since the inception or establishment of Hikma Ventures 8 months or 9 months ago, we've been building relationships with VCs, accelerators, incubators in the US, Europe, and MENA mainly. And basically, we're using our global Hikma network to source deals, as well as our own personal networks. So in terms of our mandate, we have specific areas of focus, be it in digital health or therapeutic areas, because at the end of the day, we're a strategic corporate VC. So in terms of digital health, we're looking at areas like wearables, digital medical devices, big data analytics platforms, healthcare marketing platforms. And in terms of therapeutic areas, it's mainly areas that are very strategic for Hikma. So it's areas like oncology, respiratory, chronic disease, be it diabetes or cardiovascular, consumer health. And, one thing that I should have mentioned was, one of the reasons we established Hikma Ventures is basically for it to act as an intelligence gathering unit. So we're going to, see which areas are gaining traction and then feed them back into our R&D teams and BD teams to work on that. And one area that I'm seeing a lot of traction is mental health. So back to your question in terms of, the forging relationships with specific accelerators and VCs, it's, it all boils down to chemistry. At the end of the day, it's, where you see there's, you can easily, pick up the phone and call, for example, Samer, and, for Samer to act as a sounding board when you're looking at a deal to give you his insights about, a certain transaction, even if, they're not interested in investing. So, they act as a sounding board, and, at the same time, they see the value add of having Hikma Ventures at the table. Because at the end of the day, we're not going to invest unless we're going to add value. And, for the ones who go the extra mile and see that, we can actually add value in those specific areas and not just, for example, as an accelerator, the last thing, I hate to, for example, receive a lookbook of 100 opportunities that are not even, part of our areas of focus. So there are many accelerators that actually go the extra mile to, send us opportunities that cater to our interest. And, it's very positive. Like I'm seeing a lot of, kind of positive responses. We're forging very strong relationships, and, we're close to making our first investment, actually.
Well, good luck with that.
Thank you.
And Lana, you mentioned something which 2 or 3 of the panel members already mentioned, is the people relationships and the interaction. And it's probably the same with any business, but I think particularly the venture capital business, it's really driven by relationships and people. And for me, it's interesting to come to events like this and listen to the people talk on stage or present, but the true value is in the networking and the people you meet, and that's really the value of things like this. So you gave a nice compliment to Sama, and I've already met a company here that he's a director of, and the CEO spoke very highly about his support. So Sama, before you're besieged by other people, I'd like to ask you one more question. In terms of the companies or the organizations and the ventures that you're funding, over time, if they're independent entities, they'll look to raise more funding from elsewhere, which means that you as a shareholder, or Crescent as a shareholder, will be diluted and will have less control, or maybe lose control. Are you comfortable with that? Can you accept that? And what if other people that wanted to come in were even competitors to Crescent?
Well, yeah, absolutely. So the good thing with the structure that we have is at the early stage, we're not dealing with having to raise funds, which is usually the most difficult part of raising funds. When the business gets to a point where it's self-sustaining and it needs growth capital and it's ready to move on to the next stage, we absolutely do look for. When we are actively as shareholders looking for them, we'll look for strategic partners. We'll look for strategic investors. Unless it's an extremely large ticket size, then that's a different story. So absolutely, it needs to be an independent business that stands on its own, that is able to operate and raise the funds it needs. Now, having competitors come in, I guess that's a that's a bridge we'll cross when we get to, because I don't think it's a situation that'll arise very often. And us being the only shareholder, I think we have a bit of control over who we sell shares to. But we're definitely open to the idea of bringing in investors down the line, and ideally strategic investors that help steer the way within that specific industry.
Interesting. I think when that moment comes, if you have a competitor that's interested, it's going to be a very interesting discussion.
Yeah, absolutely.
Yeah. Aaron, back to our earlier conversation. Hey, your advice was fantastic. My company got accepted. I've had 3 months with you guys. It's been wonderful. We've really learned a lot. But now we're a bit scared because you're about to kick us out. It's the end of the 3 months, and there's a big, wild world out there, and we're not quite sure where we go here. And is that the end? It's no more support from you guys? We just get booted out? What happens next?
It's been a good ride, but summer is over, so I think the relationship is over. No,
you're so cruel.
I mean, for us, we talked about KPIs and how we measure success. I mean, very much for us, it's a matter of where will the companies be 1 year later. I mean, obviously, we look at because we're very much going to invest in about 20% of the companies that come through our accelerators. So certainly if you are now within our portfolio, then obviously that continued support will go through. I'll take a very live case. There was actually a few African fintech startups that we sent across to Asia to work with some of the banks there. A few of them managed to get POCs with those banks. So 2 things have happened. One is they need to now set up an office and an ability to execute on the ground with those banks in Asia. So we will do that and help them with that process. And as well, when they get back to Africa, they're now insanely more validated, right? I mean, you've got very large banks like UBS and Credit Suisse that have tried them out, and for an African bank to look at you and kind of go, okay, you are now a global player. That's incredibly powerful. So obviously we continue that support. The newest pillar within Nest that we've actually just launched to specifically cater for that kind of support is what we call Meta. And Meta is an old party language, and it means to have an active consideration for somebody else. It is an invite-only members club for the world's best founders, industry experts, and investors. And that is sort of an accelerator light, if you will. So every day we'll have sessions around design thinking, legal, IP protection, how to structure a business. So it becomes a more self-service accelerator, whereby if you feel that after the accelerator you need more training and more access to experts around IP protection because you're moving to Asia and you're scared, that's a platform by which we've created for you to do that. So it's a club that we're launching. We just launched in Hong Kong. We're launching in Africa in the next 3 months, and Europe and the US will follow soon very quickly. And that means as a startup that has gone through our accelerator, you now have access to not just spaces in all those markets, but also community, a community of other Meta members who are also industry experts, who are also investors that you have a common thread with. So support will always continue, because if you fail within a year, we have a pretty bad blemish on our track record.
Well, I think it's a great initiative, and I think, again, it comes back to our, your club there is connecting people. It's really putting people in contact with other people.
Absolutely.
And again, there's this underlying theme that I think is really important. So I'm feeling a lot more comfortable. Thank you. Gary, from what you've seen and heard today, what do you think about the quality of the startups that we've heard and the ecosystem here in Dubai and in the greater region?
Well, I mean, I think that what's really clear to me is that the next big idea doesn't necessarily have to come from the US, and I think that's part of the reason that Wire exists, to make sure that in markets where we're present or in markets where we're not present but we have a good partner, that we still have access to that talent and to helping that talent develop. So I mean, I think that the talent here is wonderful. It probably needs a little bit of help in terms of giving the entrepreneurs the right platform so that they can really create globally scalable businesses. And I think that as long as an entrepreneur has an idea that's interesting, that's not a copycat of something that's already happening in the US, but something that really has some sort of interesting market insight, whether it's specific to this region, but then somehow scalable to other regions, then that's what we'd really be interested in looking for. And in fact, we already have some collaborations with other countries in the region. So we, with the Duke of York and his pitch at the Palace Initiative, we went to Saudi Arabia, and so we were talking to the guys at the King Abdullah Economic City to see how we can work together and maybe bring some of their startups to London to kind of use London as a way to kind of help them to scale. We have an agreement with Baxel in Azerbaijan, whereby they kind of work with startups, and then we participate in all of the kind of like mentorship and selection processes, and then eventually some of the best startups can kind of then see if they can enter into Wire. The reason why I'm here today is because I met one of the organizers of this conference at an event in Lebanon, and similarly we've been at events in Egypt. So if we're really looking to kind of find really interesting ideas, we can't limit ourselves only to the UK, which is part of the reason why we have to travel outside of the UK and then also to kind of try and find local partners. And in fact, we are right now speaking to one local partner about seeing how we could collaborate to do some sort of co-acceleration or co-working space together here that would then feed back into the larger kind of Telefonica network.
So I think what I heard is the talent here is wonderful. They may need a little bit of a guiding hand. What I didn't quite hear is, when is Wire setting up an accelerator here?
So I'm not sure that we're going to set up an accelerator here. I think that the way that we've decided to do it outside of countries where we have a footprint is to find a local partner. And for us, in a lot of countries, it's actually the local telco, because a lot of the same issues that they may have, we have as well, and we don't necessarily view them as competitors in the space of working with startups. In fact, Telefonica's recently launched an agreement with Deutsche Telekom, Singtel, and Orange to kind of co-invest and co-accelerate in startups that could be strategically relevant to the entire sector. So what we would try to do is to find a local partner here and see if it makes sense for us to kind of figure out how we can work together and then give the startups access to that entire scale of all of these different corporates working together.
I think that's a great approach, and if I were a startup in this region, I think I'd be looking to follow that development very closely. So one of the key roles of the moderator is to keep track of time. I have to say I have absolutely no clue whether we're at the end of our allocated time, but I hope there's some time left for a couple of audience questions. Can somebody tell me whether we are about to get kicked off the stage or if we have a few minutes left? Or
I think the organizers left, so we're just like here all night.
Okay, so lock the doors and we'll carry on. So we're open to questions. Please, there's a hand up over there if somebody has... Oh, do you need this microphone? Oh, we still got 10 minutes. Great. Okay. So please think of your questions. My plan was to have about 10 minutes left at the end for Q&A, so by luck rather than design, we're at that stage. So there's a gentleman there with his hand up. Do we have a microphone or do you need this one?
Yeah. Hi, Paul. Hi, everyone. So my name is Fadi Bizri. I'm a partner at the new VC fund based in Beirut that invests globally. So we're about a $50 million fund. And for investments outside of Lebanon, we invest in growth. So my question is more for the corporate VCs. Obviously, we love to invest in B2B. And what are your preferred processes when working with VCs? Do you have a defined track? Do you prefer to go to them for a follow-on investment or for co-investment? Do you prefer that the VCs go to you with industry-related deals? What's your approach?
Samer, do you want to go ahead? I'll go after you.
Well, we don't have a set process for this. Again, it comes down to connections and conversations. I mean, even the ideas that we've started developing started as, in most cases, as a conversation and just ideas being bounced around the table. So we don't have a preferred process, to be honest. In a lot of cases, specifically with Crescent, a lot of VCs approach us for investment, for funding, because we do have Crescent Investments has quite large stakes in various PEs and VCs around. So we do have relationships with a lot of VCs for that purpose. But we haven't gone to the stage where we're looking at a VC investing in one of our businesses. We do have a lot of co-investments that we go into with VCs. We've taken some deals to VCs for co-investments that we were looking into. But in our case specifically, the businesses and the companies that we are developing ourselves, we haven't gone to that stage. But I'd imagine that, again, we would be looking for strategic partnerships. So if we are to approach a VC for a specific investment in one of the businesses, it'll be for a strategic purpose rather than just cash. Sorry, can you just tell me what VC is it that you're founded? BNY, okay, I thought so, yeah.
Anybody else want to comment?
Yeah, so our relationship with the VCs basically is that from the very beginning of the selection process, like in the UK, we basically, I don't want to say outsource, but we kind of bring in an external jury of VCs to basically be the ones to determine which of the startups that get in. So from the very beginning, the VCs are kind of like actively involved. They play a very great role in terms of also mentoring the startups. So each startup has at least one VC mentor, and they also do office hours, and we have 3 VCs in residence in the Wire Academy. So I think that for us, it's kind of having a conversation. What we ask sometimes, the VCs also serve as a source of deal flow, because it may be the case that you're seeing a startup that you think is kind of really interesting but too early, and then you can kind of push them our way and then kind of then say, okay, well, our acceleration period lasts 10 months. Let's see how they get through this process. At the same time, a lot of VCs that have kind of later stage companies send them our way as well, and they say, well, can we get them into Telefonica, since we're also responsible for trying to get startups, even if they're not in Wire working with Telefonica, we can also help to facilitate the business development role there as well. So we kind of just have an open relationship with the VCs.
Okay, then I think
you have one
just it just remains for us. Oh, yes, go on. Sorry, what is less strategic?
No, it's definitely pharmaceutical related, but for example, a very strategic one would be something like a digital inhaler or a glucometer, whereby it's part of our core therapeutic areas. A less strategic one would be a smoking cessation wearable product. That's where consumer health is not a prime area for Hikma. It's something that we've recently set up, but we're still toying with the idea. Yes.
Okay, so thank you. Firstly, I'd like to just thank ArabNet for organizing such a great day and such a wonderful location. It's a pleasure to be here. And I'd specifically like to thank the 4 panel members, I think, who did a great job. So if we can just give a hand for them.